Hey, welcome back to the program. It's Thursday, March 21. Great to have you with me as always. Subscribe to the channel if you haven't already. Like the video, click the bell for notifications, and tell your friends and family to do the same. I appreciate the support. Checking in on the Federal Reserve FOMC meeting yesterday, their decision to leave interest rates unchanged as I said they would. And we'll check in on the EPA's announcement of their multi-pollutant emission standards for model years 2027 and later light duty and medium duty vehicles. More restrictions on the ICE vehicle as the Biden administration tries to force a transition to plug-in electric vehicles. Checking in on the Fed first and the FOMC policy decision yesterday, Wednesday, after a two-day meeting that started on Tuesday. Fed left the federal funds rate unchanged as expected. Want to go through the statement that they released and some of the comments from the press conference Fed Chair Powell had after the release of the statement. Pretty much as expected, but just as Fed Chair Powell had done in 2023 December meeting, again yesterday goes dovish. A hawkish Fed statement. We're concerned about inflation. We're going to stay on pace to bring inflation out. And then in his commentary at the press conference turns dovish again. Spikes markets. I'm convinced now, while the Fed has a dual mandate of max employment and stable prices, I think its primary mandate is plunge protection for the U.S. stock market. Now, I'm in the equity market. I've been in the equity market. I am today. I want stocks to go higher. I want to earn capital gains. But the unfairness of the Fed's actions with respect to wealth creation and the division of wealth between the haves and the have-nots is just stunning. Continue to penalize savers, continue to reward risk takers in a way that's creating a huge wealth gap between those that can invest in stocks and those who cannot invest in stocks. Really horribly unfair. Anyway, let's check in on the statement. Actually, compared to the January FOMC statement, only a few words were changed. And I'll identify those right now in their first paragraph. The statement starts out, recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained strong, and the unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. All they did in the whole statement was remove the words moderated since early last year, but. So in January, the statement read, recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have moderated since early last July, but remain strong. Those words were removed for the March statement. Otherwise, the statement remains the exact same. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that the risks to achieving its employment and inflation goals are moving into better balance. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. In addition, the committee will continue to reduce its holdings of Treasury securities and agency debt and agency-backed mortgage-backed securities as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. Very little change in the statement, still very much focused on inflation. But in their press conference, the Fed chair indicated that there's likely to be some rate cuts here in 2024. Now, as you've heard me talk about for some weeks now, I was correct to be on hold yesterday. I believe they'll be on hold on their April 30th, May 1st meeting, and I believe they'll be on hold through their June meeting. But in his press conference, he did indicate that the federal funds rate will be 4.6% at the end of this year. That's approximately 75 basis points below where we are today using midpoints. And so that means 3 rate cuts between now and their December meeting. So I have them on hold to their June meeting. Then they have 4 more meetings in the year, July 30, 31, September 17, 18, November 6th and 7th, and December 17, 18. So if I'm right, they're going to cut rates 3 times between July and December. Now, I think the Fed is going to back off that. I don't think the Fed will be doing 3 rate cuts this year. I still believe they should go 1 more rate cut higher, take this to 5.5%. But nonetheless, that's what was said. So let's just go through some of the comments from the press conference. So in his statement, Fed Chair Powell said, "We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year." So that's talk about reducing the federal funds rate. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current range for the federal funds rate for longer if appropriate. So a little back and forth there. Remember now, markets only want to hear the good news, so they focus on the idea of cutting rates. He continues, "We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment." Just like an economist, on one hand and the other hand, Fed Chair Powell continues, "If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year. There's your three cuts. 3.9% by the end of 2025. So another two cuts, and 3.1% by the end of 2026. Still above the median long-term funds rate. Those projections will be wrong. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals." A little bit all over the place there, but clearly indicating by the end of this year, 3 more rate cuts coming, which is what markets focused on yesterday. The only real change here is in late 2023, markets were projecting 4 rate cuts in 2024. So now onto some Q&A. And I don't have the questions, I'll just offer the comments. Continued strength in the labor market wouldn't be the reason to hold off lowering interest rates. Strong hiring in and of itself would not be a reason to hold off on rate cuts, said Powell, adding that the job market by itself is not cause for concern around inflation. Okay, well, not really. Rising wages, increases levels of employment tend to increase output and demand, and therefore put upward pressure on prices. Another comment, major inflationary data points, the consumer price index and the personal consumption expenditure, rose both for January and February. Powell thinks this data is just further proof of inflation's nonlinear path downwards. And he goes on to say, "I think they haven't really changed the overall story, these recent bumps higher in inflation, which is that of inflation moving down gradually on a sometimes bumpy road towards 2%. We're not going to overreact to these 2 months of data, nor are we going to ignore them." Powell continues, "We believe that our policy rate is likely at its peak for this type of cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year." All right, so markets heard we're cutting rates in late 2024. Remember, markets are instant discounting mechanisms and new information, although I suggest this is not new information. Just before the Fed announcement, the S&P 500 was 5,255, closed the day at 5,306, up 51 points. 10-year U.S. Treasury was 4.28%, down 5 basis points to 4.23% by the close. Gold, trading 2,160 at just about 2 p.m., finished at 2,211. So gold markets believe the Fed is making a mistake as well, and that inflation will remain. So buy gold. U.S. dollar, the index was trading 103.90 just about 2 p.m. Closed the day at 103.41, so weaker dollar. Not surprisingly, interest rates are expected to fall later in 2024 based on Powell's comments. And interest rates drive exchange rates. Against the euro, we're trading 108.63 just before 2 p.m. Finished the day at 109.36, so stronger euro, weaker dollar. And so it's a little giveaway to markets again. Relatively hawkish statement, followed by a relatively dovish Fed chair commentary. Did this in December, has done this again. Kick markets higher. All right, we'll keep an eye on that as always. All right, let's check in the other news from yesterday. From the Biden administration, the EPA, the Environmental Protection Agency, released its final emission standards for light-duty passenger cars and light trucks for the 2027 to 2032 period and beyond. This is the ongoing effort by the Biden administration and progressives in the Democratic Party to force a transition away from the internal combustion engine to the plug-in electric vehicle or the hybrid. And so let me just read a little bit from the EPA about what they say in their commentary. You can find this online if you want to go check it out yourself. Just some things I pulled out. The Environmental Protection Agency is finalizing multi-pollutant emission standards for light-duty passenger cars and light trucks under its authority in Section 202A of the Clean Air Act. The program establishes new, more stringent vehicle emission standards for criteria pollutant and greenhouse gas emissions for model years 2027 through 2032 and beyond. The effects of climate change represent a rapidly growing threat to human health and environment and are caused by greenhouse gas emissions from human activity, including motor vehicle transportation. Addressing these public health and welfare needs will require substantial additional restrictions in criteria pollutants and greenhouse gas emissions from the transportation sector. Recent trends and developments in vehicle technologies that reduce emissions indicate that more stringent emission standards are feasible at reasonable costs and will lead to significant improvements in the public health and welfare. Section 2A of this preamble, the executive summary, which is what I'm reading from, make it clear that continued greenhouse gas emission reductions in motor vehicle sector are needed to protect public health and welfare. In addition to and separate from this final rule, the administration has recognized the need for action to address climate change. Executive Order 14008, Tackling the Climate Crisis at Home and Abroad, January 27, 2021. One of the first things President Biden did when he got into office, and not democratic, right? This is executive order, so dictatorial. Recognize the need for government-wide approach to addressing the climate crisis, directing federal departments and agencies to facilitate the organization and development of such an effort. On April 22nd, 2021, the administration announced a new target for the United States to achieve 50 to 52% reduction in 2005 levels in economy-wide net greenhouse gas pollution in 2030, consistent with the goal of limiting global warming to no more than 1.5 degrees Celsius by 2050, and representing the U.S. nationally determined contribution under the Paris Agreement. That's a stunning statement. The idea that we can control the temperature of the Earth to such a tiny degree, 1.5 degrees, is just silly. It's hubris, it's arrogance. They continue to say in the executive summary, these actions, while they do not inform the standards established here, serve to underscore the importance of EPA acting pursuant to the Clean Air Act authority to address pollution from motor vehicles. They go on to say, our analysis for this action supports the conclusion that the final standards are technologically feasible and that the cost of compliance for manufacturers will be reasonable. Those things are both wrong. The standards will result in significant reductions in emissions of criteria pollutants, greenhouse gases, and air toxics, resulting in significant health benefits for public health and welfare. We also estimate that standards will result in reduced vehicle operating costs for consumers and that the benefits of the program will exceed the costs. Based on EPA's analysis, it's the agency's assessment that the standards are appropriate and justified under CAA Section 202A. Completely wrong in that. We also estimate that the standards will result in reduced vehicle operating costs for consumers and the benefits of the program will exceed the costs. Guaranteed 100% those things will be wrong. Let's just kind of sum this up from the global warming alarmist perspective, the Biden perspective, the progressives perspective. Humans pollute the planet. Use of fossil fuels has caused an increase in CO2 emissions, and CO2 levels in the atmosphere are too high, causing a greenhouse effect whereby heat is trapped over the earth, causing surface temperatures to rise. The temperature rise will melt glaciers and ice at the poles, causing sea levels to rise and displacing hundreds of millions of people from the coastlines and creating more severe weather patterns across the globe, resulting in loss of life, loss of crops, loss of jobs, and the collapse of the modern world. Computer models show that if the global population doesn't do something about this very soon, it will be too late and Earth temperatures will continue to rise and the human race will be wiped out. Progressives say that the endpoint is in the early 2030s. If nothing is done by then, it's over. Such is the reason for the urgency to act, a computer model. Could be, though not likely. Global warming alarmists have been wrong with their predictions about global impacts since the 1970s. When at the time, the fear was the emergence of another ice age. Al Gore has been wrong. John Kerry has been wrong. The UNFCCC, the United Nations Framework Convention on Climate Change, has been wrong. Even NASA had to change their rhetoric. In the early 2000s, NASA took us from global warming to climate change because surface temperatures stopped rising. Climate change alarmists, global warming alarmists, progressives say fossil fuels must go away. The world can't run on them and still stop the global temperature from rising above 1.5 degrees from the 1800s. That starts with the internal combustion engine vehicle, the forced transition to the plug-in electric vehicle. Now, I've said this before, I'll say it again, we're making a colossal mistake. The model forecast on how long we have to cure this problem is absolutely going to be wrong. We will experience a massive misallocation of capital and scarce resources, a sharp spike in the cost of living, a drop in quality of life, and domestic tensions. And keep in mind, Asia and Africa, led by India and China, are not on board this program. Just watch how and where the rich, the famous, the connected, our political leaders live, where they have their second and third homes, how they move around the world. And you'll find no alarm about global warming and rising sea levels on their part. Progressives are making a mistake. We cannot force in transition away from fossil fuels and expect to successfully achieve the goals for reduced greenhouse gases and the reduction of friendly gas CO2 in the atmosphere. We must let market forces decide. Plug-in electric vehicles are not the answer. Let's be good stewards of our environment. Let's not crash the global economy and the quality of life for humans across the planet on a computer model. All right, that's all I have for you today. Always try to buy American.